So one of the next vehicles that you can have is a company. Now, a company is proprietary limited. We do have three types of companies in Australia. One's proprietary limited, which means it's private. We have a company that's called limited, and it's also listed. So that's like your BHP, your Qantas. We also have other companies that are limited, but unlisted. So what these are is public companies that aren't on the stock exchange. And basically, to qualify for that, you need to have more than 50 shareholders. Now, Australia's made up pretty much majorly of the proprietary limited, your mum and dad's business. So that's a lot of the time what people are looking for in a company. So let's talk about some of the issues with a company. A company costs a bit of money to set up, but a company actually protects you as a owner, director, shareholder, that if something happens with the company is the one who goes into insolvency or bankruptcy. Now, there are situations with you as a director that you can get pulled into that situation as well and be a part of the wind-up. But if you've done the right thing, you've put your BAS forms in on time, you've paid your taxes, you're free and clear. A company has limited liability. That's why it's called proprietary limited. Limited means you're only limited to the amount of money that you actually put into the business. So the downside to the company is that, look, it's got more costly to set up than a sole trader or an ABN or a partnership. It is now controlled by the Australian Corporations Act, right, which is then governed by ASIC. So as a director, you've got a few more things that you need to have to do. You've got duties as a director in this business. Some of the other benefits is that now the company only pays tax at 30%. Now, don't get me wrong, if you take money out of the business and you earn $200,000, you will pay up to the 48.5. But the company will pay the first 30, and then we give you a dividend, and then you pay the difference. You don't get double taxed. Now so then the company pays 30, you pay 18.5 if you're on the top rate. But if you decide not to distribute the money and you use the money in the company to build, grow and develop, you've only paid 30 cents. Whereas with an individual or a partnership, you could have made all that money, but you've had to pay all the tax. So you're a plumber, you're going to pay all the tax, buy yourself a new truck, buy new tools, do all that sort of stuff. But as a company, that money's only paid 30 cents tax and you put it back into the business. There's a couple of other benefits about a company as well. And one is that it's quite easy to sell a company, but it's not that easy to sell an individual business or a partnership. So if you came to me and you said, look, I've got this plan, I've got a media business, okay, well, I'm a graphic designer and I'm going to have a communications company and I want to sell this out in 5 years, I'd say to you straight away, let's start a company. Let's not muck around with the individual, let's not muck around with the partnership. You've got a clear vision about what you're trying to do. Let's set you up a solid foundation for your business. It's like building a house on sand or versus building a house on a concrete block. That's the best thing that you can do. So look, it all depends about what your end game is, and it depends about your product, it depends about your risk, but in most cases, people who want to run a business, I would always recommend a company because limited liability. Also, you have to pay super, which I said before is a really good thing to make sure that we all save some money. And also, you've got a good structure there. If somebody sues you, so this is what I was trying to say before, a company is a separate legal entity. You as an individual are a legal entity. A company can sue and be sued. A company can enter into contracts. A company can operate a business. You might be a director of that company, you might be a shareholder of the company, but the company is the company. So the company can be sued and the company can go bankrupt. Now, there'll always be a record that the company's bankrupt, but it doesn't then show that you as an individual are bankrupt because your company is bankrupt. And let's face it, okay, Australia is a country where we let people have a go. You know, last year there was 10,700 companies that actually went into insolvency. So we do have an ability in this great land to allow people to have a crack at business and fail. Because, look, a lot of businesses do fail. So, but having a company allows you to get back on the horse, do things properly, get some proper learning and move forward. Some of the downsides are, there's some legal obligations as a director. Of course you can't be fraudulent. Of course you have to do the right thing. Of course you have to pay your taxes on time. But look, you've got to file some things with the ASIC, Australian Securities Investment Commission, once a year. You've got to make sure you keep notes and minutes. And to be honest, it's probably not a bad thing that you have to keep a record of what you're doing in the company. Like, it keeps a lot of people honest. And as I said, one of the major things is when you've got employees. If you want to move from being an individual, an ABN sole trader, same terminology, into a company, it's possible. It's totally possible. Look, it gets a little bit painful because you've had all your taxes in your personal name, you've had all your taxes and your ABNs and everything. So you've got to set up the ABN, you've got to set up the company, you've got to set up the directors, you've got to set up the shareholders. Now, if there's a lot of value in the business as a sole trader, you are essentially selling the business to the company, okay? So what I usually try and say to people is, if you're planning on moving to starting as a company, start as a company. If you're going to give it a go to start with, give it a go and move across to a company in a pretty short period of time. The same thing happens as if you're a partnership. So if you move from a partnership to a company as well, you go through a little bit of pain, you go through a little bit of hassle. You've got all these registrations with the tax department. Now, all of a sudden, you're getting 5 pieces of paper a month instead of 2 pieces of paper. But look, it's entirely possible and it is available to do it. A little bit of hassle, but if you find the right person who knows what they're doing, totally possible. You can do all this yourself, okay? But at the end of the day, and I use this analogy, I go to a dentist, I could probably pull my own tooth out with the right guidance and with the right understanding and probably with the right amount of Panadeine Forte or something. But do I do it myself or do I go and get somebody else to do it? Somebody who does it day in and day out. Look, the law, tax law, the Corporations Act, it's pretty complicated and you really have to understand what you're doing. But equally, there's a lot of people out there who claim that they know what they're doing and are registered, right? But still, it makes it even a more painful process. And as I've said to you before, if I need to go to a dentist to get a crown filled, the first thing I'd probably do, I wouldn't look in the yellow pages, I wouldn't look online, I'd probably ask my friends or my family, who's a good person to go and get my crown done by? Because it's a pretty frightening thing. And so I'd probably go and get a really good recommendation and go and see a guy, and hopefully he'd be excellent because it was a referral. If I get it out of the white pages or yellow pages, I don't really know what I'm getting. Maybe they've got some testimonials on how everybody's so happy, but can I be really sure? I mean, it's my tooth. But what I don't do is I don't go and get a referral or somebody who's really good and they offer to do it for $1,000 and then I think, oh no, that's okay, I'm going to shop around. So I go down the street and I find it for $9.20 and hey, guess what? I found it for $5.60 from someone else. That'd be great. So I suppose the same thing happens when you need to get these things done. You need to make sure that the person doing it knows exactly what they're doing, because there's a lot of people who claim that they know what they're doing in this area, and there's a lot of people who are allowed to do and set up companies, and hey, you can do it yourself, get online and do it, but you really know what you're doing. I mean, would you get the pliers out, pull your tooth out and try and fix it up? What, use cotton wool instead of, I don't know, string to try and fill up the gap that's there? No, you probably want to do it properly and make sure everything's done properly. Because again, if you don't do it correctly to start with, you could end up with problems down the track. And the problem about setting up a company is if you set it up incorrectly and you have to change owners and you have to change business names, it's extra cost. If you screw up the name, you have to get a new name. If you haven't chosen the name properly because somebody else has got the trademark on it, you're going to lose the company name. You're not going to be able to get the website address. You're then going to have to pay stamp duty to change the shareholders. So, just get some education, make sure you do it right. There is another step to getting set up after this, which is actually setting up a family trust. Okay, so the reason why I suppose rich people make more money than a lot of other people is because they do things that are more complicated than the average person does. So one of these vehicles is setting up a family trust or setting up a trust, or there's various different forms of trust. So another dimension to setting up a company is either using a trust to run the company, via which you can do business, or making the trust a shareholder of the company.